So guys, in this video I'm going to do a brief explanation to what forex trading is. Okay, so a summary of what is forex trading. Okay, so let me just jump straight into how for you guys today. So I would say forex trading is forex. The word forex is an abbreviation. So forex, let me get a notepad so that you guys, so the word forex is an abbreviation, an acronym. Okay, so that let me use the right word, an acronym. So this forex and this, so you see, so this forex and this ex, so this stands for foreign and this stands for exchange. Okay, are we clear now? So forex is a foreign exchange. Okay, so foreign exchange. And what I want you to also know about is forex only deals with currencies. Okay, so forex deals with currencies. We also have different types of markets. We have the stock market, we have the index market, and we have the commodity market, we have the crypto market, and we have the forex market. Okay, so the forex market deals with the currencies, and the stocks deals with the stocks, like basically the stocks. For some of the stocks can be the Tesla stock market, the Apple stock market, the Coca-Cola stock market, and we also have what we call the index or the commodities. Okay, so but in this video I'm just focusing on only what forex is. That's a foreign exchange, so we deal in only the CD. Okay, so that's what I'm coming to throw more light on. So before I said that forex is an acronym for foreign exchange. So basically to exchange a foreign money for another. Okay, so that's what, and mostly what we trade. Before I said forex, we trade in what currency? Money can also be termed as a currency, so currency can also be termed as money. Okay, so that's what we call forex. Okay, and also in forex we have something we call the major pair and the minor pair. Before I jump into the major and the minor pair, I would like to explain what a pair is. A pair. So this pair we know is something that is two. So let's say A and B. So I'm pairing this to this. Okay, so that's a pair. But when I just say, let's say for example I say just currency. So currency can be maybe GBP. GBP stands for Great British Pound. Okay, so this GBP, Great British Pound. So this is a currency. But when I say a pair is when we have another currency attached to it. So let's say this A and this is B. Okay, do you get me? So this first currency and the second currency, which comprises to become what? A pair. So I can ask you, what pair do you trade? And you say, oh, maybe GBP USD, British Pound USD. Okay, so that's it for this, for what a pair is. Okay, sorry guys, I'm new to this app, so I would be trying my best to just make a shift on this. Okay, so let me so now we are done with what a forex is, what a major pair is, and what major currencies are, and what a pair is. So a major currency is mostly the dominant currency, a currency that are widely traded. And a typical example of a major currency is the USD. That's the dollar. USD stands for dollar. So when I say let's say a currency symbol, example, a currency symbol, let's say we have NZD. It comprises of 3 alphabets. Okay, so the first 2 represents the country. So NZD is the New Zealand, and the D stands for the dollar. Okay, NZD is the New Zealand, and the D stands for the dollar. So that's if you are trying to find the meaning of the abbreviation that we use. Okay, an example of GBP. So Great British Pound. See, mostly we don't just mention the British Pound, we add the Great British Pound. Okay, to this, and if we bring the USD, this is what we call a pair. So sometimes we can just say GU, the first letters GU. If it's let's say Euro USD, so it's also EUR, that stands for Euro USD. So I can say I trade EU. So that's the E and the U, that's the dollar. So EU. Okay. So that's for the currency symbols, explanation to the currency symbols. And I was saying that before, we have types of markets. We have the stock market, forex market, and the commodity and the index. Yeah. So but our major focus here is just on the forex. Okay. So forex. And also let me just explain this as we go on so that I won't forget. So we have something we call USD. Let's say USD NZD. Okay, USD NZD. Okay, or let's say, for example, let me do USD GBP. Okay, so USD GBP. Okay, so this, let's say this is called the base currency. The base currency. And this is called the quote currency. Okay, so this is called the quote currency, and this is called the base currency. So the quote currency, as in the price of the product. So let's say, for example, this USD is, example, I'm giving an example. Okay, this USD is a car. So the base currency is we are buying the car, and the quote currency is the price to which we are using, or the cost of the car. So let's say I'm buying the car for $10,000. So there's the quote price, and there's what we are buying. Okay, so mostly the base currency is what we are buying, and the quote is the price we are buying the car at. Okay, so that's the difference between the base currency and the quote currency. Always remember, the base currency is also known as the home currency. So let's say, for example, in Ghana, here, and I'm trying to buy, let's say, a USD. So Ghana, so it will be like this. It will be Ghana cedis is to USD. So here, there's my base, and there's my quote currency. Okay, and so let me just give a brief scenario of what the forex is, so that maybe you also get from this point of view or this perspective. Okay, so forex is like it's just like how the forex bureau operates. Okay, so how the forex bureau operates. So you just go to a forex bureau that you want to purchase a foreign currency. So you see, so when you go there, they will attend to you. So they'll ask you, what currency are you willing to purchase, or are you willing to exchange for? So let's say you go there with $1 and you want a CD. So you see the exchange that you do there. Basically, that's what we do on forex market. But this time around, it's just online. We don't go to shops to purchase the CD. We do it via online. So that's what we have the brokers. Okay. So I'll get to the brokers. So it's just a step at a time. Okay. So the forex bureau, everyone knows how it operates. You go there with a CD that you want to purchase $1. Okay. So let's say you have 10 CDs, and you want to exchange it for $1. Let's say 10 CDs. You want to exchange it for $1, and before they will say the dollar, let's say the dollar, or let me just say 100 CDs, so that it will be more this one. So let's say you have 100 CDs, I want to exchange it for $1, and they're saying that to get $1, to get $1 is 10 CDs. So per dollar, so let's say $1 is equivalent to 10 CDs. You understand? So how many dollars are you going to get with 100 CDs? It's just $10. Just $10. You understand? So meaning this 100 is equivalent to just $10 when you go to the forex bureau. So typically that's how it operates on online, like the brokers we use. Understand? This forex exchange, forex market, that's how it operates online. And then how we get our profit is, let's say for example, you bought dollar at 7 CDs. Okay, so let's say for example, you bought dollar at 7 CDs, and now you heard that let's say a month after, then you heard that they said dollar is now selling at let's say from 7 cedis. Okay, so I'm coming right. So you bought dollar 7 cedis, 7 cedis, and now they're saying that the price of dollar has now shoot to 15 cedis, 15 cedis. Yeah, so now 15. So at first it was 7 cedis, now it has shoot to 15 cedis, and I said okay, fine. Then you have to go to the forex bureau to change your dollar, to change your cedis back to dollar. Okay, so now you take your dollar, then you go to the forex bureau. Okay, you are changing, you are selling to you are selling your dollar to them. So let's say you are party A and the forex bureau are party B. So now with your $7 that you bought, $7 that you bought, now it's worth 15 cedis. So you go as a party A to the forex bureau that you are selling your what, your dollar to them. So to you are selling, and to the forex bureau they are buying it from you. You understand? So what I'm trying to say here is, or what I'm trying to insinuate here is, all what we are doing is basically buying and selling. So it's either you're buying from party A, you're selling to party B, or you're buying from party B and you're selling to party A. So this, you having a dollar at 7 cedis and now dollar has gone to 15 cedis. So now you're willing to what, to go to the forex market to go and change your dollar to get the price advance. Okay, so meaning you've made an interest of what, let's say the price difference is going to be 8. If I'm wrong, it's going to be 8. Okay, so 8, so meaning you've made an interest of $8, let's say 8 cedis. Before you bought it at 7 cedis and now it's selling at 15 cedis. So you made a profit of what, 8 cedis. So this is how we gain our profits. This is how traders we make profits. We make profit based on the price advantage. You understand? We make profit based on the price advantage. Okay, so the way we gain, it can also be the same way we lose. So let's say for example you bought the dollar at 7 cedis now. Then later they are saying the dollar is now going for what, 4 cedis. You see, you've made a loss. You see, so the same way you make profit, that's the same way you can make profit. So basically that's how forex is. It's either you're buying or you're selling. Okay, but this is just that it's online. Okay, so I don't know if you are getting the concept here, the concept I'm trying to put here, so that you know what forex is on the normal or on a basic level, what forex entails. Okay, the rest are technicals, like technical words we use. Okay, technical words we use, which along the line I'll explain some of them. Okay, so that's for what forex is and what some of the terms are and what you need to know about forex. Okay, and also, so now I'm sure by now we all know what forex is. It's an acronym for foreign exchange. We all know what a major currency is. We all know what some of the markets are. That's the stocks, commodity index, and the currency, that's the forex. Okay, and we now know what a base currency is and what a put currency is, and we now know some of the abbreviations, that's the currency symbol. Okay, so now let's just do some small terminologies here, some of the terms we use. Okay, so in forex we have something we call long. We have something also called short. We have something also called bullish. We have something we call bearish. Okay, so let me start with this one. So long mean to buy. So someone can say I'm long in the market. If you don't know what long is, you won't understand. So I'm going in for long, so meaning I'm buying. Okay, so I'm going in for short, meaning what, I'm selling. Short is for sell. So long is buy, short is sell. And bullish is what, when the market is in an uptrend. And bearish is when the market is in a downtrend. Okay, so you get me. So long is to buy. So long is you are buying. Before I said that forex is all about buying and selling. So long, short, those are some of the terms you'll be using the most. So long, short, bullish, bearish. So the bullish market is, or a bull, you can say just the bull, or the bear market, the bull or bear. So bull is an uptrend. and the bearish market is what, a downtrend. So basically, these are some of we have more, but these are some of the common ones that we'll be using more often. Okay, so this, we have bull, we have the bear. So we know bull up, bear down. So when the bull hits you with its horn, you are definitely what's going up, and the bear will hit you down, will push you down. The bear, that's how the name come about, bear and bull. And before this video, I made mention of what a brokerage firm or a broker, or what a brokerage firm is. So basically, you see, before I was saying that forex is more or less like the forex bureau. That's a physical transaction. So with this, we also have our forex bureau, like let's say the shop is the broker. So they assist us with the transactions. So let's say, for example, if you key in, or if you tap on the arrow key on the keyboard, or maybe you type something on the keyboard, or you give an instructions on the keyboard, then the computer now will process it to the final receiver. So that's how brokerage firms operate. So they are more or less like the gateway to the market. Okay, so they are more or less like the gateway to the market. So they help us access what, the market. So those are the brokers. Okay, so the brokers, let's say for example you want to make a phone call. If you don't have a SIM card, you can't make the phone call. So you see, SIM card, gateway to making a phone call. So broker, gateway to accessing the market. You see, so if you don't go, let's say for example, if you don't go to the forex bureau, you won't be able to get access to what, to the market, like to make the transactions, to make the exchange you want. Okay, so same applies here. So the brokerage firms, we have a lot of them. Okay, we have a lot of them. Some but the one I personally use is Exness. They are very good. Their rates are very good. Okay, so that's it for what a brokerage firm is. And before, I made mention of what the types of currencies. We have the major currency, the minor currency. Those are the common ones we use. Okay, so basically that's what forex is all about. Okay, just that we have some small, I'll have some small touches to make, because you need to know what the types of traders we have and the types of charts. Because sometimes you open a chart, you see lines, dot, don't know what the lines are all about. Okay, so we have charts, we have something we call charts. So the charts, so we have types of charts. So let me just give you a brief explanation to that, types of charts. Okay, I don't want this video to be a long one, so let me just end on the types of charts, so that when I do another video, then I'll explain what some of the types of traders we have, and also the fundamentals, or let's say the approaches we have to analyzing the market. Okay, so some of the types of charts we have are line chart, bar chart, candlestick chart, and line chart, bar chart, and candlestick chart. So with the line chart, this is how it looks like. So it's something like this line. It's in a line form. Okay, it's in a line form. And with the bar chart, let me show you. Okay, let me just use the trading view to show you, so that you get a better understanding of it. So types of chart we have, this is the line chart. So let me use a plain this one to show you, so that you see it clear. So this is how the line chart is presented. So this is how the line chart is. And also we have the candles. So this is how the candle, so you see this is the candle formation. I'll do a video explaining how a candle is formed. Okay, and also there is the bar. So this is how the bar is. I hope you guys are getting a clear view. So mostly what we normally use are the candlestick patterns. Okay, so candlestick pattern. So this candlestick pattern. These are what we mostly use. Okay, so yeah, so let me just end it here, so that maybe in another subsequent video I will continue with the types of traders we have. Okay, and some of the strategies we use to approach the market, or use to analyze the market. Okay, so thank you for watching to the very end, and be expecting more. Okay.